Daniel, that is the worst acting job I've ever seen in my life. What are you eating? Air?
Little mouth open eating.
He's looking like a puppet over there. Somebody's just
I'm Royce's vessel to win the after Bell Vets. So
yeah. Keep your stock picking job. You're not an actor. But actually, I just call you the Pac-Man. It's kind of what you look like.
Cue the music.
Hey, if you guys have any, you might want to watch whatever it was you're reading down here.
I got that. I don't gotta fake that.
Okay.
Oh, okay.
All right. Let's get going. It is. I have purple behind me because it is Holy Week. It's Easter week, and for some people who have stocks, they probably said Holy Week because
especially on Hertz.
It's a holy good week. I don't know. My prayers were answered for Hertz. Not mine personally, but no.
It hurts so good.
Come on, baby, make it hurt so good. Twice. This is twice now that they've been hurt so good because, like I said, back when AMC and GME were all the talk like it is again, Hertz did that before, and it had a big squeeze, and now it's number 2. But anyway, let's introduce everybody real quick. I am the ape. I am the one that throws poo. I'm the one that doesn't know anything about what they're talking and never bring any facts. But we're having fun anyway. And below me is the other ape who actually wins the stock picks, and his name is JPM, Josh Morgan, aka the bank. And top right is the annoying person that is actually winning now, and it actually is on the call every week. So I mean, geez, stop it! Whatever you're doing, just reverse it. So
hey, I've had wins even when I didn't show up.
He's trying to make up for past years.
I got you, man. I got you.
It's Daniel Hopwood, a.k.a. Goldman. And then we've got...
Was not prepared. I wasn't prepared.
Bottom right is none other than the man who is winning financial awards here lately and finishing books and doing all kinds of things. I mean, he still has time to come visit us on Wednesdays, and that is Royce Wells, a.k.a. Quanticus Maximus. No?
Are you not entertained?
Yeah. Okay. Quantimus. I don't know. All right. Let's just move on. I'm not quick today. Unlike
today.
The other day. So I tried to beat you to that. Got to do disclosure. I haven't done the disclosure in a while, so I hope people haven't been taking financial advice off of this because the disclosure is we are not financial advisors. This is not financial advice. This information is provided is surely for educational entertainment purposes only. Please always consult an investment professional for making any financial decisions. And I will add to that, or just let our bot take care of your money.
Yep, in the Forex market. In the Forex market.
In the Forex market, but in the future, maybe more.
If they did listen, though, they might have made some money.
No, lately they
as long as they didn't listen to Darin.
Yeah, there you go. All right, and that's all the time we have today, folks. We will see you next Wednesday. All right, we do have a hard stop because actually it's getting so busy around here that Royce has to talk to some more people. So we've got about 30 minutes max here to get done a show that we normally do in an hour. So I'll try not to talk too quickly, but let's address the markets already. It's been crazy. It's been a roller coaster, mostly downward lately. This time it was 1.7 down, 2.2 down, and then over 3 down for the 3 markets. So big time red today. And why did that happen? Well, they're always going to say tariffs. But as I've spoken about before, yeah, this is something that was going to happen. Tariffs is the only thing that they are using as an excuse now under the umbrella of, Trump did it all. It's tariffs. There was nothing about the
7% on China. Come on. What you
all
got,
these
China?
Fed reports, all these Fed reports were false up until now. Okay. For the last 3 years.
Hey. You've heard of propaganda machines, right? Okay.
Yes. All of media. All right. So, Mark, that's the markets today.
Fake news.
Fake news. Yes, right. All fake news. I can't even do his. I can't do him. Trump. I can't do an imitation of him.
What you do in your time is your business.
very profitable. No, I'm just kidding. I can run for president now. No, all right. So 10 years down after 5 days of selling off. Is it still down, Daniel? I didn't see today. 10-year. That's what we always look at now. That's kind of the indicator. No matter what BS you think on TV.
It's still falling. So when it hit a high, the yield hit a high of 4.58. Now it's at 4.28. So,
So the crazy thing that's been going on is the yields are going up while the stocks are going up, and vice versa. And usually it's the opposite, right? I mean, that's what's saying that there's something weird going on in the markets, and we can speculate all day.
So the weirder thing is that the U.S. markets are currently trading how emerging markets typically do, and so what that means is, the dollar is down while bonds are going down, and typically you don't see that in the U.S. markets, right? That's more of like a emerging market, unstable currency and asset situation. And so a lot of people are showing speculation that just means dollars are simply leaving the system and being put into assets outside of the US. So, is it just kind of a trade in the moment? Is it, an actual shift? That takes time to tell. That doesn't happen in 3 days, right? Because there's trillions of dollars in US assets. But it is kind of interesting because it is something that rarely happens to, something like the US market.
Well, it's a story trying to be told by, I think, manipulating things that is, it's trying to hide up what's really, really happening. Anything really quick from the banker? We're going to move quick today on just the general state
I'll
of the
get
market.
to it in the next couple of segments.
I figured, yeah, okay.
We'll
move right on to. Are you talking about it's definitely a recession? Well, I mean, where have you been the last 2 years? Okay, and Daniel brings this new indicator. Maybe he can coin this now, the Coachella indicator. So then that's Daniel Hopwood. You can credit him with that. Years later, in one of Royce's textbooks, he can bring up the Coachella.
Yeah, we're talking about collateralized Coachella debt securities. Okay.
There you go. So go ahead, talk about that. What is this thing you speak of?
Yeah. So for those that I guess maybe don't know, Coachella is probably like one of the two biggest music festivals that happen in the U.S. every year. It's the biggest one as far as I know for, we'll call it the Gen Z millennial age people. It's kind of like hits the younger cohort where like something like Stagecoach is like, when you age out of Coachella, you go to Stagecoach. But 60% of Coachella attendees used a buy now, pay later platform. I don't know who Coachella partnered with, but to afford those tickets. So that means more than half of the attendees of Coachella financed their, fun trip. And I've never done Coachella. I've tried, but COVID happened. And I can tell you, at least at the time, the ticket is $300. If you don't live in LA, you got to fly there. So that's $500 for the weekend. Then you got to rent a car because it's in Palm Springs, which is 2 hours outside of LA. Then you got to get a house, which is in high demand. So you split it with a bunch of friends. It's probably another $500. So if you really had to break it down, the 60% of people that finance just the ticket, I'd hate to see what else they financed for that trip, because the ticket is maybe a quarter of the cost. Maybe it kind of depends on how you do it, right? Even if you do it cheap, it's probably $1,000 weekend.
Sleep in your rental.
You can car camp. You are allowed to do that.
I mean, Wakarusa and all these other music festivals. Yeah, I've done it.
Yeah, I'm willing to bet. Yeah, there's very few showers taken. The
I
thing
probably
is,
dated myself.
I'm willing to bet.
The last time there was a Rockarusa.
He was front row of Woodstock. No,
Thanks for that.
I'm willing to bet, though. I'm older than you. I'm willing to bet, though, that of the ones that you said 60% that use the buy now, pay later, aka Affirm, all these, what's the Swedish one? Anyway, all of these buy now, pay laters, those that did not use it, put it all on credit cards. And those that used it probably have already run up their credit cards to the max, and they didn't have any space left to charge it on their cards. Because, I mean, we're getting those indicators Fred reports. We're getting those indicators everywhere. Was this the section that you wanted to talk about, or another one? The haircut. Josh.
Oh no, no. Actually, I was going to say, like, as far as the Coachella thing, it's kind of like the tale of two different economies or two different levels of wealth, because you hear reports about people that are putting this grandiose concert on, buy now, pay later systems, and then the flip side is you've got. I think I saw a report about how you could rent a private plane to take you directly to Coachella, because everybody keeps getting stuck in the traffic, and it causes this massive, like, you're into 10 to 12 hours stuck in traffic while everybody gets out of the desert. And then you've got other people that are paying thousands of dollars just to hop on a plane for a 25-minute flight in and out. And it's just been ferrying people, a whole fleet of planes have just been ferrying people back and forth. And it's kind of a symbolism of what, a lot of people in America are experiencing right now, where you have two very different levels of income that, you've got the haves and the have-nots, and the have-nots are still trying to, keep up with the Joneses because of all of the, they were able to have a little bit more when we had the stimulus payments and everything coming through Coachella. And so you got this massive influx, and everybody kind of, there's like, oh yeah, it's great. We'll use all the stimulus and re-inject it into the economy. And so a lot of people got comfortable with that higher income lifestyle, but that's not there anymore. And so it just, I don't know, to me, I saw a lot of symbolism in that whole situation. And then, from economically, yeah, you've got like the debt bubble and everything to factor into, but that's a whole different conversation.
Yeah, I think Daddy will end up paying for it. Those
He
buy
always
now, pay
does.
laters, and the credit cards that have been run up. Dad, it's maxed.
Money, please.
All right, I'll get
It'll
you
be
out
the
of it this
boomers.
time.
They're the ones with all the money.
That's true.
Oh, not anymore.
Yeah.
Oh yeah, that's true. They lost.
All right,
They
so,
lost about 10%.
Yeah.
Right.
I don't think we're done yet. Anyway, moving on. We've got. Hey, I want to give you credit for what you researched here, but you said the White House National Economic Council Director Kevin Hassett said on Fox that he's 100% sure the U.S. won't enter a recession this year. So we all know what happens when people say things like that.
No one can be 100%.
Yeah, it reminds me of the 2 times now Powell said inflation's transitory, right?
Yeah, that's right.
It's like I don't
what's
know
this
if they're
game?
like trying to calm people down, or they just like think like we're really that stupid.
Sounds like when Kramer said bye.
No, that's the big, like, that to me is the big red flag, is that the only place that you currently find people saying recession is not an option, recession is not going to happen, like we're not currently in a recession, are people from the White House. Nobody
No
else
matter
is
which
saying
party you're in. No matter which party
everybody
you're
is saying
they do that.
It's bipartisan. It is not geopolitical. Like it is literally everyone that you see.
Yeah.
Other
like
than the
yelling
people
fire.
that right.
in a movie theater. It's like, so no recession. No, we don't do that.
Yeah.
So Ray Dalio, which you know how much I love those hedge funds. I did see this, and I saw you put it in here. Said it's going to be worse than a recession. Okay, well, there's only one other thing I know other than worse than a recession. It starts with a D, and it rhymes. So I don't know.
He talked about 1930. He was pretty candid in the interview.
By the way,
I mean,
recession
take
stops
from
at
it what
about
you want.
35%. Depression
35?
starts at about 35%. So
Yeah.
hey, once we're 35% down, we'll start using the D word.
And we got the employment has to actually be reported truthfully as well. So we're going to move on. Haircut indicator. What do you mean by that, sir, Daniel?
All right, so we
Bringing
got
all
a
these
new
indicators.
one. I know. It's funny. I've followed markets for probably pretty closely for 5 years now. And this year, I have learned so many. I'm like, okay, now I think they're really just kind of like making them up. But so this one is for our ladies out there. And it essentially says that when you enter a recession or, economic times start to get tough, you go from blonde to brunette. And what that means is that all the ladies that used to color their hair, used to get haircuts on a regular basis, start to go, changing my hair color when you do it the right way, apparently, costs you about like $300, depending on where you are in the US. And they go, maybe I'll just let my natural hair color just kind of come back out so I don't have to keep managing this. And so, this indicator shows that, women are getting cheaper haircuts. And there's also other things that are kind of like, branch off of that, like press-on nails are at an all-time high on Google search trends, which I thought was like kind of funny because I actually heard about that about 6 months ago as far as like a business idea, which is funny because now if you were to have done it, your tariffs would probably ruin that e-com business. But it was nice while it lasted. But yeah,
you do your own manicures and pedicures, right? You do your own. You don't go get them done and pay somebody to do them.
Exactly. You're probably doing the at-home like hair treatment thing.
Talk about how bad men are and all that stuff.
Yeah, that's precisely. You downgrade to the Trader Joe's wine.
Yep.
So if in my view, if women are starting to like, maybe I don't care about my hair so much as I did before, it's a pretty tall tale sign of how things are either going or people feel they're about to go.
That's similar to the lipstick indicator, right? I mean, it's kind of a one-off, I would think. So
Josh's hair has just been disheveled the last few episodes. So
it's actually mine. You know what? Men can be part of this indicator because I have held back a haircut for a couple of.
Royce just said, "I'm not partaking in this at all."
He's really saving money. He's really saving money.
No, just for men, for me.
That's right.
Little touch of gray.
Just a little.
So anyway, we'll just call this section the BS indicators because we keep getting more and more. So whatever thing we can narrate to fit our agenda, right? That's going to become an indicator. So let's move on to tariff news. I mean, that's pretty much been the whole news that has taken up even every day when I look for my three things, it's like, should I go with that tariff story, that tariff story, that tariff story, that China story? I mean, it's like that's all that's out there. They're pushing it so hard. It's almost like what the media loves to do, which is, hey, look over here. Well, something over here is happening. And I have a feeling that's what's going on with this. So I know that, Royce, you brought up that 247% now tariffs or something.
On China, yeah.
And then I told you that basically is not for everything. It's only for a few things. So really, you have this wide range of tariffs from the basic to all the way up to 250.
Call it blended tariffs.
Yeah, blended tariffs.
And just for the record, guys, we're only about 14% from that D word from our all-time highs.
Oh yeah.
Wow. Okay. Let's just bring it down.
And the thing is, though, if we go
another D word,
the way everything is structured currently, like if it goes into a U.S. D word, it's going into a global D word.
Yeah, that's exactly right.
Oh, I'd put it as an ultra D word.
Yes, like a big fat D word.
Oh no!
And according to our weekly chart on SPY, oof. You don't want to know where SPY can potentially wind up.
Well, are we back
so
down
I'm not
the
getting my
yet?
Bugatti?
You can definitely get it. Just make sure you get it before the bottom falls
Maybe
out.
like the Hot Wheels version.
Okay, watch out for the repo man.
Speaking of that, you said it's good. The market's going to go up, and then it's going to go. Well, part of that is going to be because people were stocking up. Once they heard these tariffs were coming, they went and bought a bunch of things. They're trying to hurry up and buy cars. They're trying to buy. That's what showed up in today's numbers. Actually, hurry up and buy all this stuff. But then what's going to happen is it's going to drop, which would mean the market up and then the market down, right? And then that's when it's going to get bad because then all these people have all this inventory that nobody's going to buy. They're just going to sit on it, and they're going to have to do sales and clearance, and then margins are going to go down, which they're already going to go down.
I'm already waiting for my Amazon pallet. $39.
That's right. Go. You can buy them. That's right. I've seen those. I thought they might be some shady links, but yeah, I've seen those. What was it? 2 billion in iPhones that was carted over here from India or something? I don't know.
I don't remember, but they chartered like 5 jets and just stuffed it with
I was going to say it was like half
here.
a dozen cargo planes that came across.
That's right. And then today, the big thing was that NVIDIA and AMD, because of the semiconductor, we won't allow. I mean, I don't have the details, but the bottom line is that it's going to cost NVIDIA and AMD. They're having to pay a bunch of money now for the H2O, is it chip or something that that our country does not want us to supply to China. Because
we like can't export them now.
For the DeepSeek, they used it to do things, and now if they start getting all those, it's not only gonna, well, it's gonna make them right there with us in the race for AI. So again, just a little. If you could we could talk an hour, which we don't have time for, but we could talk an hour just on China tariffs, China and U.S. tariffs right now. So we'll pop on down to the next one, which is, are the tariffs are working? Was the question that Daniel asked next. Royce, what do you think? Are tariffs working, or is it just a big narrative?
No, I actually think they're working. But to what end? My thing is, I don't think that the tariffs are the end game, but I do think that Trump is trying to reroute who is getting inventory to which port and to which country. So basically, he's trying to throw, trade route. He's trying to change the trade route so his friends, potential friends, because they're lining up to get an audience with him to basically benefit from this shakeout, right? Mm-hmm. And basically also by saying, hey, we're not going to do it on electronics, we're not going to do it on computers. That basically makes things safe, so that way you can still get your inventory and then you can sell it where you want to. So are they working? Yeah, I think this is a very good illustration of I don't know, game of risk, or it's like go big or go home. It's like, but last time I checked, you should not threaten, presidents of any country, or put your hand on them, for the record.
Anything else,
to me, like that's the part that's the most. Yeah. Well, that's the most like frustrating part about it is it's not necessarily that. It seemed like as of last week. I mean, we're talking about the exceptions to the tariffs now. Mm-hmm. And it seemed like last week we kind of had a little bit of clarity, and we seemed like we kind of knew what the negotiating strategy was. And he's hard on tariffs, and he just wants all of these 170 some odd countries that are coming to, kiss the ring and like give him whatever he wants and things like that. And then you get this $1 million dinner with NVIDIA, and all of a sudden he's like, oh, okay, I'll back off. And now, okay, we are going to do China tariffs, but we're not going to do it on smartphones or semiconductors or, graphic GPUs or things like that. And I mean, it just, again, and I feel like I'm banging my head against the wall saying this, like we're back to more economic uncertainty. And that's kind of why the market's reacted how it has the past few days, because we thought we knew where he was going with it, and now we don't. And it's like, I don't know, remember that old Office meme where, Michael gets the vasectomy and he's like, snip, snap, snip, snap, snip, snap, like reverse, snip, snap, like which one? Like make up your mind. And that's the part that I think is really frustrating everybody is you can't pick up what he's putting down, and nobody really knows what the actual plan is. So everybody's just left to guess. And that's one thing that markets absolutely hate to do.
You also have to remember that for every winner, there has to be a loser. So if it looks like he's showing his hand, he has to change it up. Right? So it's like, if everyone's like, oh, you're certain that this is going to happen? Go the exact opposite way. There's 100% there's not going to be a recession. Go the other way. Start preparing for a recession.
Yeah, I
just unfortunately in this current climate, the loser is going to be everyone. Like if he drives us,
I think the banks will wind up on top. I honestly do think the banks will wind up on top, because all the debt that's being created from all the credit cards is creating a bull market in debt. But if you don't know how to use debt, that's where you get screwed. And most Americans don't know how to use debt.
Yeah, but I'm not worried about most Americans. I'm worried about most economists.
No, that drives the economy. That's why there are options. That's why basically people option out their shares so that way they have cash flow. If you don't know how to manage your debt, you will fail. And basically, like I said, we are used to a cash bull market, but you can have a debt bull market, and that a debt bull market is basically where you're capitalizing on the fact that you have debt and you're making that debt move around and you're still making money. And as long as you outpace the interest on the debt, you're winning. And for most people, they don't manage their money well, let alone the interest, let alone the debt, on the interest rate on that debt. And so they basically usually buckle. Like, you remember when you first went to college, you're like, you get your first credit card, 29.9% interest. Let's go. They gave me $1,000. Let's go. It's crazy. Who would spend that? Who would buy that? But all you saw was the $1,000 and you didn't care about you spend $1,000 is going to cost you $4 or $5 grand to pay it back.
I mean, I get it, but there's two things about that bother me. And one of them being that his whole goal here is to get it to where he has GDP, because that's why he's trying to drive the trade routes back around. Like, he's trying to U-turn the trade routes where everything is being put onto the U.S. He's trying to turn that around and build manufacturing so that the U.S. is now exporting everything. And so he's trying to get all of these other global economies to start buying U.S. goods. And I get that, but it's all like, the other thing is that if he does not successfully do this, I mean, again, all of these other countries that have bought our debt are now currently selling our debt because it is not nearly as stable as it used to be. So if we get to the point where the U.S. is potentially defaulting on that debt, then you get you think about the small time bank runs that we've had where everybody's trying to sell and offload, like a la, 2000, 2008. It's going to be that on a global scale. And that's the big risk that he's running. So if it doesn't work exactly like he's trying to massage this whole situation out to be, it is going to turn into a global depression.
And that's why everyone's buying gold.
Yep, all-time highs and keep going.
That's why people are buying gold. And it's like, hey, hedge.
Because where
all you can do is hedge at this point.
That's the only safe spot.
But I say the banks are going to have this problem if Trump was never elected, if tariffs were never introduced. This bank thing has been bubbling for a while now. So it's not going to be because of tariffs. It might have also a reason, but this bank thing, and even some of the people in the banking and even these analysts on TV are saying that someday we're going to have a shakeout. I think even Janet Yellen said that, is that there's going to be a shakeout of some banks and we'll lose some banks and other banks will take it in, all that stuff. So this has been spoken about for the last 3 years. It's just been waiting to happen. So now I opened up with
just different ways to go about it.
Yeah, I know. But like I opened up this show with is that this umbrella called tariffdom is what everything is being thrown under now. And now they can use all the ails and the pains of the past to put under this little umbrella and say, oh, that's the reason. Had nothing to do with our responsibility and our debt over the last X amount of years. Well, Royce, anything else? I see you.
One last thing.
Yep.
To run a successful business, and this is from my point of view, obviously, you always have to have more coming in than going out. By messing with the tariffs, as long as we're making more money and we're able to pay off our debt faster than we're accruing our debt, then you win. But in order to do that, you have to shake up the world markets and those trade routes to make sure that we have enough coming in or we're exporting enough out to offset what we've already accrued. So Trump has been many things, and he's gone bankrupt many times. But every time, you have to fail to win. You have to fail to win. If you don't fail, you don't know what works and what doesn't work, and then basically now you're playing the game of Monopoly, but on a global scale.
Yep, absolutely. Got to shake it up. Nobody else wanted to for all these years. 30 years, nobody wanted to.
I would honestly be afraid of the markets if we didn't change the trade routes, because we are constantly accruing debt. If that number doesn't start to, The definition of insanity is doing the same thing, expecting different results. So if all we're seeing is that basically we're at all-time highs for our debt, you have to change how we're making our money as a country to offset that.
Yep.
It's just good business sense. People may not like it. People may be afraid of it. But in doing so, that's probably why, after this 15-year bull market, people are going, you know what? Take profit. Don't sit there because we're not sure if this is going to work or not. So may as well take it off the table and see what's going to happen next.
That's a good way to end it. We are going to move on to after the bell, crayons and charts. Royce, you got that ready?
Hold on, let me get there. Yep, I'm actually going to talk about bonds, corporate grade bonds, and the bull market that's coming.
So what does this mean? What does investment grade corporate bonds mean?
Investment grade corporate bonds are about to rally. And the last time that they did this, right before COVID-19. So let's go back. Let's do a little bit of history. All right. So this is a weekly chart, right? So that means you got a lot of data here. And right here, this is May of 2019. Before COVID happened, I'm going to expand these guys out so you can see this, right? So May, this guy started a bull run all the way up until we got to about March of 2020. And then it suddenly fell from the sky. So I mean, basically bonds were just on a nice bull run. Well, guess where we are? We were at the bottom of the band and it rose. Guess where we are? Are we going to have another pandemic? Maybe. Or maybe the market's just going to crash and bonds, basically people will start hiding in bonds and gold and silver, anything that will allow them to not lose 15 years worth of gains. You have to put your money somewhere. And as it's been said by many brilliant people, there's always a bull market somewhere. By all means, ride it. All right. That's all I got, guys. Appreciate you.
All right. That was after the bell, crayons and charts with Royce Wells, silver and gold. Yep. All right. And we're going to go back to all four of us.
Earworm.
I know. Silver and gold. We had a wager going on, which I don't even know why we do this anymore. It's silly.
That's because you can't even get on the board.
I can't even go to the executive bathroom. I haven't gone to the executive bathroom in, I don't know, a year now. But Daniel comes in and his little smart self. He's doing it again. Let me pull up the scoreboard. Here it is. We have Josh with 4. We have Daniel with 4. And Royce and I, the MVPs, have 0.
Absolutely.
Congrats, Daniel. That's 3 out of 4 if you really want to juice it up and make it sound good.
Actually,
and what it was, it was BAH was remember Bah Humbug. That's what I'm saying this week. For some sounded like an investment firm. Is that what it was, or a lawyer firm or something? Booze and something.
Hey, give us some booze. We need some booze
and Bahs. I'm booing all right. Okay, but congratulations. And what is it this week there, Daniel? You got it yet? What's your millennial stock for this week?
Yeah, we gotta pay homage to Darin's past and go with Hertz.
Yes. Wow, why would you do that
just because I mean you got to check this out. 56% change during market hours. Now after hours, before we started, we were talking, right? It was up 15% or something. Now after hours, it's up 38% right now.
Yeah, I am up over 100% on this guy, by the way.
So it started trading at $4. Now it's almost at $8.
Absurd.
Royce, can you go back? Just slide back to 2021.
Slide back to 2021. Sure. Give me 1 second.
Almost yeah, look at that. Look at the bottom. I told you this happened before.
But it was lower. It was lower.
It was 17 cents or whatever it is, and then jumped all the way up to where it was. So like I said, I remember this happening before. So is this an indicator, since we're doing indicators today, of meme stocks about to bust? Being GME and AMC and all the meme stocks now are about to bust. So anyway, go ahead.
Well, if you remember what happened in 2022.
That's what I'm saying. It's around that same time, and we know we like to talk about things rhyming. Maybe we got Dr. Seuss coming up here soon.
It's 8:05, folks. 8:06.
All right. So what is the channel here down?
Oh, this is gonna be beautiful. This is gonna be beautiful. Woo! Look at this, crazy. Like, there's no room. There's absolutely no room. All right. So from where we are, it's breaking the chart. It's moving so fast. So I'm gonna actually have to go down to the 1 minute to even give us a range that's even plausible.
Right.
All right. So we got a range between 939 and 478. So let's just break it 5 to 9, 9 to 5. Let's go 9 to 5. There you go. Four of us, $4, $1 a piece. Pick your poison.
5.
And that'll get us out of here on time too. What you got, Daniel? What? And I know who you're picking next. So
wait, sorry.
Daniel, you're first, and Royce second.
9 to 5. So top is 9, bottom is 5. But also note that that's still higher than where we started.
How much do each of us get, or like how big are the ranges?
$1 each. Bottom of the range is 5 and below, and then 6, 7, 8, 9.
$1 bill, y'all.
I want 5 to 6.
So 6 and below is Daniel. Royce?
I'm going to go 6 to 7.
Knew it. Why wouldn't you? All right, and
I'm taking profit. That's why.
Yeah, well, no, because you know this thing is coming down like a rock. All right. Well, who's next? It doesn't matter at this point. I won't get offended either way.
No, Josh, come on.
Darin, go.
No. Well, sorry, Josh. You know I'm going to go the next one, so I'm going to have to take 7 to 8.
Josh, you're winning right now. It's at 816.
Oh, I mean, either one is equally as probable. Like the top or the bottom. This is all manipulation. Like there's no predictability.
Within a week, you're right.
I'd say next week it could be at $25, or it could be at 4 cents.
Yeah,
that's true.
It could be also at 4.
They may actually get rid of all those swap baskets and things that are out there that are just clogging up the system.
Depends how hard
no
Square wants to press this thing.
All right, guys, we're sitting at 4:59. We did it. We need to get going so Royce can do his business, or he can do our business, I might say. So yeah, exactly, which has been great lately. If you want to wonder what's going on here, you know it's arbitragetrade.com. I will see you guys. He had to jump on it now. See you guys next week. Bye.
Bye.